If you've been looking into getting a mortgage and checking out different lenders, you might have noticed their sites offering you mortgage pre-qualification, mortgage pre-approval, maybe even both. But do you need both? Aren't they the same thing? Well, today we are going to dig into the differences between mortgage pre-qualification and mortgage pre-approval. Mortgage pre-qualification and mortgage pre-approval are really two separate steps on the path to homeownership. Mortgage pre-qualification is actually pretty optional, while mortgage pre-approval you're probably going to need to get. Now, it doesn't make things any easier that when you're heading to lenders' websites, sometimes you see terms that are completely different from these. You might see a lender offering to make you a certified homeowner or giving you a verified pre-approval. All these different things are just branding, and when it comes down to it, you're either getting a pre-qualification or a pre-approval, but you're going to want to know which is which. A mortgage pre-qualification is an informal estimate of how much you might be able to borrow from a lender. You're going to fill out a form that asks you for basic information like your annual income, monthly debts, and your estimated credit score. You're probably also going to be asked for your name and some contact info, but that's just so the lender can reach out to you. So long as you're the one providing the information, so you're saying, for example, I think my credit score is between 700 and 740, not I authorize you to run a credit check, that is a mortgage pre-qualification. It'll usually take just a few minutes to fill out a pre-qualification form, and you'll get your answer back in a few minutes too, because the lender's just going off of what you've told them. And what you've told them might not necessarily be right. Maybe you forgot about your student loan payment because it was in deferment for so long. Or perhaps your credit score is higher than you think it is. That could mean that you're actually able to borrow more. That's why pre-qualification doesn't hold a ton of water, since it's just going off of what you're saying. Who knows how accurate it necessarily is. Still, pre-qualification can be really helpful when you're just starting out and trying to figure out whether you can buy a home. Maybe you've used a home affordability calculator to see how much you can afford. Pre-qualification can give you an idea if that's an amount you're also going to be able to borrow. If you're ready to get serious about your home search, then you need to level up and get a mortgage pre-approval. In fact, some real estate agents won't take you to see properties unless you've got a pre-approval in hand. So while mortgage pre-qualification is pretty optional, a mortgage pre-approval is a must-do. With a mortgage pre-approval, you get a formal document outlining how much a lender might let you borrow, as well as the terms of the loan. So what kind of mortgage it is, how long it'll last, and other associated costs. When you apply for mortgage pre-approval, you provide info like your contact details and also sometimes information about the home you hope to buy. You're also going to need to dig up some documents. You'll usually want to have your most recent W-2 or some other income documentation on hand in order to complete your pre-approval application. That's the biggest difference from pre-qualification. You won't just tell the lender what you think. Instead, you'll authorize them to do a hard inquiry into your credit. That means you have to provide your social security number or another type of unique ID so that the lender can verify your credit score, income, and other financial details rather than you just supplying the numbers. Because it's a hard pull, a mortgage pre-approval is going to show up on your credit report. So if you're applying with multiple lenders, which is a totally good idea, by the way, you're going to want to apply within a limited time frame, usually no more than 30 to 45 days. That way the credit bureaus can tell that you're shopping around and it will only show up as one inquiry. The reason it's a good idea to apply for pre-approval with multiple lenders is because even though you're giving all of them the same information, you're not necessarily going to get the same results back. So that means different amounts that you could potentially borrow, different terms, and this is a big one, different mortgage interest rates. Also, during the pre-approval process, you're likely to talk to a loan officer. That can be a good way to test drive what it would be like to actually apply for a mortgage from that lender. Filling out a pre-approval form takes a bit longer than filling out a form for pre-qualification, and you'll usually get your results in a couple of days, so that part of the process is longer too. Mortgage pre-qualification is pretty informal and it's really just for you. Mortgage pre-approval is a lot more formal and it's a lot more about what you can now show other people. You've got a document that you can bring to real estate agents and home sellers saying that you are a serious buyer. You've got a lender backing up the offer that you're making, and there's a good chance that your financing will go through. Because remember, being pre-approved for a mortgage doesn't mean you're approved for a mortgage. Once you've made a successful offer, you're going to have to go to one of the lenders that pre-approved you and actually apply for a home loan. So that's an important difference to note. Another good thing to know about mortgage pre-approvals is that you want to keep yours up to date. They're usually only valid for a certain period of time. It's often 90 days, but that's something that's important to check when you get the pre-approval. You want to stay on top of that because if you let the pre-approval expire, a lot of times you have to start over from square one, meaning they have to do a credit pull and everything, and your credit score is going to get dinged. But if you reach out to the loan officer proactively and say, hey, I know that my mortgage pre-approval is coming up and it's going to expire, usually they can work with you to just get you a new one and you don't have to go through the credit check all over again. It's also a good idea to keep your pre-approval up to date because if mortgage interest rates have changed, something that they've been doing pretty rapidly the last couple of years, that can affect how much you're pre-approved to borrow. So if mortgage rates have changed significantly, you want to know the amount that you're going to be able to borrow at prevailing interest rates today, not 3 months ago. Pre-qualification is great when your house hunt is just a dream, but once your dreams turn into plans, it's time for mortgage pre-approval. I'm Kate Wood and I write about mortgages and home buying for NerdWallet. If you have questions about any part of the home buying process, we've got answers. Head to nerdwallet.com for articles, calculators, and so much more. And while you're here, like and subscribe.